In this video, we're going to look at how the market extracts money from retail traders. And one of the ways that happens is by traders getting trapped by ranges. So let's just imagine a diagrammatic form of a trading range. Now, what generally happens is that traders will buy and sell in this range, and they'll simply end up chopping up their account. And it will look a little bit like this. The second way that traders get trapped is by buying or selling in a range and sitting in that range, and they'll place their stop losses either side of the range, a bit like this. Now, the more they sit in a range and the more that stops accumulate, the more likely it is there's going to be a stop hunt, and they become sitting ducks in that range. So it's not surprising the inevitable will happen and they will all be taken out. So the market will hunt their stop losses a bit like this. This is a slightly jokey tweet that I put out in June 2020, and what it was doing was warning traders that they were stuck in a range on gold. So this is a gold 1 hour chart. Now you can see that a range has built here. The stop losses are accumulating either side, and I've said you are here, and basically I've said watch PA here. Now this is a demand zone, and we'll cover this a bit later on, but let's see what actually happened. So there's a lot happening on this chart, but the main thing to notice is that the stop losses were run either side. So the market came up, took out the stop losses here, and then the market came down and took out the stop losses on the other side. And no surprise, it bounced at a demand zone, which is something that we'll talk about a bit later. There's also some advanced price action occurring here, and that's something I cover in my advanced course. This part of the video is entitled When FOMO Overtakes Rational Thinking. It's a common problem, and it can get you into drawdown very quickly. We've all seen it before. You get these big green candles in the market and there's an overwhelming urge to buy. But would you agree with me that it's quite a bad place to buy right at the top? And you should really control your emotions when you see stuff like this, because 9 out of 10 times the market's going to come right back down to where it started. Now let's have a look at some actual examples of when this happened. So here's a funny tweet that I put out in July 2020. What it was that the US government had announced that they're going to put a lot of money into Kodak, and it sent the market rocketing, and we can see this big green candle here on the 4 hour chart. And I put out a jokey tweet saying, "Thank you for sailing the good ship Kodak, bag holders prepare lifeboats," and a little anchor here just to show where I thought it was going to go. And surprise, surprise, 9 out of 10 times these markets are going to retrace when you see a pump like this. So you can imagine the retail traders got in probably at the top of the candle out of FOMO, thinking they're missing the opportunity of a lifetime. And what happens next? Well, it dumps right back down to that anchor where the move started. So when we look at a Bitcoin chart like this, you're getting that exact feeling of FOMO. You don't want to miss this move. But the problem is you do not want to get in here, because the market 9 times out of 10 is going to retrace. Doesn't always happen, but it happens so many times. Now, this is a chart of a crypto named Metal, MTL USDT, and you can see that the market pumped really quickly and then came right back. Now, if you had seen that pump and FOMO'd into the market, then you would have been caught out and you would have ended up with sitting on quite a loss. And the same happened here. We had a big pump and it retraced right back. So the moral of the story is to just wait. If you see a big pump, wait, and 9 times out of 10 it's going to retrace back to where it started. In the next video, you'll learn how to trade less like a retail trader and more like a smart money trader. So I look forward to seeing you then.